So whatever the balance sheet they'll give in the question, this is old balance sheet. So this profit is being created or it is earned by whom? By the old partners. You don't have a common denominator here. You have to find the LCM. So 8 3s are, that is 24. So 8 into 3, that is 8 2s are 60, 8 3s are 24. Now we'll get 3 here, 1/4/2022. Remember, you are not going to prepare at the end of the year. You are going to prepare on the date of admission. Hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram PU College, the Temple of Excellence, Mysuru. My dear students, today we are in the revision class of your chapter 2, that is Reconstitution of a Partnership Firm. Under that, we are going to study about admission of a partner. So let us see. So in this particular session, I am going to discuss what are the questions they have asked in your previous question paper. So all the questions we couldn't solve here. So similar type of questions. So almost all the questions were repeated with a different amount and with the different adjustments. So let us see few of the questions so that you will get an idea how the questions will be asked in your question paper. Okay. So moving on to the session. So let us see the blueprint of the chapter. So if you see this particular year question paper pattern and whatever the model question paper they have given, so this will be the blueprint of your question paper. So from this chapter, that is chapter 2, Reconstitution of a Partnership Firm, under that admission of a partner. So you have 1 mark, 2 questions, as well as you don't have a 2 marks question here and 6 marks you don't have, and you have a 12 marks question. Okay, so you will have 1 mark, 2 questions as well as 12 marks, 1 question. Here I have written A or R, which means that this 12 marks, as usual, every year you will be having an alternative. So if they ask 6 marks from admission, then they'll ask 12 marks from retirement. Or else, if they ask 12 marks from admission, so if they ask 6 marks from admission, then you will get a question of 12 marks from retirement. In the same way, suppose if you get a 6 marks question from retirement, then you will get a 12 marks question from admission. So I have written A or R, which means that your 12 marks. So you have to go through 6 marks as well as 12 marks question from both admission as well as retirement, because it is an alternative every year. If they are 6 marks from admission chapter, then you'll get a 12 marks from retirement. Or else if they ask 12 marks from admission, then you will get a 6 marks from retirement chapter. So the overall weightage of this particular chapter, admission of a partner, that is 14 marks, where you'll get 1 mark, 2 questions as well as 12 mark, 1 question. You don't have a question of 2 marks as well as 6 marks. Okay. So as I told you, 6 marks, it is an alternative. So as per your model question paper, so this was the question paper pattern or the blueprint of the question paper. Okay, so go through that, or remember, if you learn 6 marks question from admission as well as retirement, so it will be easy for you to attempt both the questions. So learn 6 as well as 12 marks from both the chapters, admission and retirement, and it is easy also. So if you go through one chapter properly, that is admission of a partner, your retirement, you will feel more easy. Okay, so this will be the blueprint of the chapter. Now moving on to the session. So let us see all the 1 mark questions here. So whatever the question they have asked in your previous question paper from 2019 to 2023. Okay, so let us see what are the questions they have asked for 1 mark. So your first question is, goodwill is an dash asset. So what is goodwill? Goodwill is an intangible asset. So what I mean by intangible? So you can't see that particular asset, you can just feel that asset. Okay, so that is known as what? Goodwill is an intangible asset. Next question, at the time of admission of a partner, undistributed profit appeared in the balance sheet of the old firm is transferred to the capital accounts of. So you can remember your 12 marks problem here. So in your 12 marks, they'll give you the balance sheet as well as certain adjustment. So in your balance sheet, we have liabilities as well as assets. So what they have asked, so whatever at the time of admission of a partner, undistributed profit appeared in the balance sheet of the old firm. Now in the balance sheet, they'll give you profit and loss account, either in the asset side or in the liability side. Okay, so if they give profit and loss account, so it is transferred to capital account. Normally you will take this profit and loss account where? In the partner's capital account, that is in your 12 marks problem. So they are asking you, at the time of admission of a partner, undistributed profit appeared in the balance sheet, that this profit appeared in the balance sheet of the old firm is transferred to capital accounts of dash they have given. So you are having an option, old partners in the old profit sharing ratio, old partners in the new profit sharing ratio, all the partners in the new profit sharing ratio, none of the above. So which is your answer here? Your answer is A, option A, old partners in the old profit sharing ratio. So remember that 12 marks problem. So this undistributed profit or profit and loss account, what you have in the liability side or in the asset side, it will be distributed only to the old partners in the old profit sharing ratio. Now you might be having a question, why it has to be transferred only to the old partners? Because this profit, so whatever the balance sheet they'll give in the question, this is old balance sheet. So this profit is being created or it is earned by whom? By the old partners. So before a new partner enters into a partnership firm, whatever the profit, old profit what they have earned, it has to be distributed or it has to be settled between the or settled among the old partners. Then they will appoint a new partner. Okay, so your answer is what? Old partners in the old profit sharing ratio. So when you have an option, don't get confused with the option. So go through the question properly. Almost all the answers will be, or you will be knowing all the answers, but you have to be careful while answering. Okay, so already you have learned in your 12 marks problem. So the same question they have asked here, where do you transfer that profit and loss account which has appeared in the old balance sheet? So where do you transfer? You are going to transfer to the old partners in the old profit sharing ratio, and it has to be recorded in the partner's capital account in the credit side. Okay, so your answer is old partners in the old profit sharing ratio. As I have already informed you, when you are answering a multiple choice question, write the numbers or write the alphabet what they have given, then you will write the answer. Okay, so this is how you have to attempt your multiple choice question. Now moving on to the third question, state any one method of valuation of goodwill. I have given all the three methods. So suppose if they ask for 2 marks, so normally as per your model question paper pattern, you don't have a 2 marks question from this chapter, but still know what are the methods of valuation of goodwill. So there are 3 methods, that is average profit method, super profit method and capitalization method. If they ask only one, you have to write any one. Okay, so these are the methods of valuation of goodwill. Moving on to the next question, fourth one, state any one factor affecting the value of goodwill. So there are various factors which affects the value of goodwill. So they have asked you particularly, state any one factor affecting the value of goodwill. So your answer is efficiency of management, nature of the business, location of the business. So these are the factors that affects the value of goodwill. Next question, decrease in the value of liability is debited to revaluation account. State true or false. Again, so this is a question. Don't randomly write either true or false. So understand the question properly. Again, this is a question of 12 marks. You have already learnt in your 12 marks. So in your revaluation account, so in your 12 marks solution, you will prepare the revaluation account where you have debit as well as credit side. So this is debit and this is credit side. So in your debit side, so what do you record? This is particulars. So in your debit side, what do you record? So I had given an hint in your earlier sessions, okay, in the regular classes, where in the debit side you will record A minus L plus, and in the credit side it is A plus L minus, which means that if any assets have decreased and liability have increased, you will record in the debit side. In the credit side, if any assets value have increased and liability value have decreased, you will record in the credit side. So this was a 12 marks problem. Okay, now let us see the question now. Decrease in the value of liability is debited, they have given to revaluation account. Decrease in liability. So where do we record decrease in liability? That is in a credit side. See here, A plus L minus, which means that if liability have decreased, you have to record in the credit side. This is the actual answer. But what the sentence is, decrease in value of liability is debited, they have given. So whether this statement is true, no, it is false. So your answer is what? False. It has to be credited, but they have given it is been debited. So your sentence is wrong. Okay, so your answer is false. Next, sixth question, state any one reason for admitting a new partner. Okay, so there are various reasons why a new partner is getting admitted into the partnership firm. So your answer is to get the additional capital, to get additional managerial ability, and unlimited liability is also one of the reasons where a new partner gets admitted into the partnership firm. So these are the reasons. So you have to write any one reason for admitting a new partner. Next question, seventh one. At the time of admission of a new partner, general reserve appearing in the old balance sheet is transferred to. Again, see, so you have a lot of questions. So they have repeatedly asked you the questions where you already know about it, but in the 12 marks, you are going to solve that in the 12 marks. So same here also. So what they have told, so whatever the balance sheet, old balance sheet you have, where with the liabilities as well as assets. So they have clearly told general reserve appearing in the old balance sheet. So you will have general reserve in the liability side of the balance sheet. Okay, so general reserve appearing in the old balance sheet is transferred to. So where do you transfer? That is all partners capital account, new partners capital account, old partners capital account, none of the above. So where do you transfer this general reserve? You transfer only to the old partners in the old profit sharing ratio. Why? Because this reserve is also created by the old partners and it has to be transferred only to the old partners, not to the new partner. Correct? So your answer is what? Old partners capital account. So you will not transfer to all the partners, right? You will not transfer to the new partner also. They are telling that new partners capital account. No, never we will transfer that to new partners capital account. Third option was old partners capital account. So your answer is option C, old partners capital account. Next is goodwill is an intangible asset, straight, true or false. Already we have learnt in your first question itself, goodwill is an intangible asset. So your answer is true. Okay. Next question, what is sacrifice ratio? So this question they might ask you for 2 marks also. What is sacrifice ratio? So remember, under admission of a partner, when a new partner enters, these old partners are sacrificing their share of profit in favor of new partner. So remember, in admission chapter, we are going to learn about sacrifice ratio. Under retirement, we are going to learn about gain ratio. Okay, so easy to remember, when a new partner enters, of course you have to share your profit to the new partner, correct? You are going to sacrifice your share to the new partner. So what is sacrifice ratio? The ratio in which old partners sacrifice their share of profit in favor of new partner. The old partners, or you are going to sacrifice your share to the new partner. So that ratio in which they sacrifice, that is called as what? Sacrifice ratio. What is the formula? Sacrifice ratio is equal to old share minus new share. Okay, so this much you can write for 1 marks. For 2 marks, you have to elaborate why it has been calculated. It has been calculated to distribute the goodwill amount bought by the new partner among the old partners. So as I already told you, old partners will sacrifice their share of profit in favor of new partner. For that particular reason, what the new partner will do? New partner, while admitting into the partnership firm, he gets some amount which is known as what? Goodwill. So that goodwill which is bought by the new partner will be distributed among the old partners in the ratio that is called as what? Sacrifice ratio. So why sacrifice ratio is calculated? In order to distribute the goodwill which is bought by the new partner among the old partners. Whatever the amount which is bought by the new partner as goodwill, it has to be distributed to the old partners in sacrifice ratio. For that reason, we have to calculate sacrifice ratio. So hope you are clear about this question. If they ask for 2 marks also, you can write the answer. Okay. Next question. A, B and C are partners in a firm. If D is admitted as a new partner, so what happens if there are 3 partners, and suppose if a new partner D is getting admitted, so what happens? Go through the option here. Old firm is dissolved. Whether the whole firm will be closed down? No. Right? So your whole firm will not be dissolved. Old firm and old partnership is dissolved. Both old firm as well as old partnership agreement get also dissolved. This is also not the right answer. Old partnership is reconstituted. So this will be the correct answer for this question. So what do you mean by that? Old partnership is reconstituted, which means that your partnership firm will continue but with the new agreement. Okay, so your firm will not close down. So when a new partner enters into a partnership firm, your firm doesn't close down, nor the partnership gets split there. So what happens? Your old firm will be reconstituted, or it will continue with the new agreement including the new partner. Okay, so your answer is old partnership reconstituted. So your answer is option C, old partnership is reconstituted. Hope you are clear about all these questions. So these are the questions they have asked in your previous question paper. Now coming to the 11th question, state any one right acquired by a newly admitted partner in the partnership firm. So when a new partner enters into a partnership firm, what are the rights he can enjoy in the partnership firm? So your answer is right to share the assets of the partnership firm. Of course, now suppose if he has become the partner of a partnership firm, he has a right to share the assets and right to share the profits of the partnership firm. So you can write any one because they have asked for 1 mark. So he has a right to share the assets of the partnership firm. He has a right to share the profits of the partnership firm, right? He has a right to take the managerial decisions. So you can assume yourself that you are partner of a partnership firm and what are the rights you can enjoy there. Okay, next question. Decrease in the value of liability is debited to revaluation account. Again, they have asked a question which is practical in nature. So in your revaluation account, so in your debit side you will record A minus L plus, and in the credit side you will record A plus L minus. Now let us see the question. Decrease in the value of liability is debited. Again, they have asked this question, decrease in liability. It is what? It is credited. But what they have given, it has been debited. So, to revaluation account, state true or false. So, what is your answer? Answer is false. It has been credited, not debited. Okay, so this would be the easy way to identify. Just remember, in your debit side, you'll record A minus L plus, and the credit side A plus L minus. Okay, so these are all we have learnt already in your session. Okay, next one is 13th question. If the amount bought by the new partner is more than his share of capital, the excess is known as. Already I have told you, when a new partner gets admitted into a partnership firm, he brings some amount as capital. Along with that, some extra amount is bought by the new partner, which has to be distributed among the old partners. Okay, so that extra amount other than capital, what is bought by the new partner, what it is called as? It is called as goodwill or premium. Okay, so hope you are clear about all the questions of 1 mark. Now coming to your 2 marks question, so as per the new question paper pattern as well as your model question paper, so there is no 2 marks question, but for the safer side, let us see what are the questions they have asked for 2 marks in your previous question paper. Okay, now go through the question here. Goodwill of the firm is valued at 2-year purchase of the average profit of the last 4 years. The total profit for the last 4 years is rupees 40,000. Calculate the goodwill of the firm. Now, they have asked us to calculate the goodwill of the firm, for which there is a formula. So, your formula is goodwill is equal to average profit into number of year purchase. Now, we don't know what is average profit. So, let us find out the average profit. Average profit is equal to total profit divided by number of years. Now, how much is total profit? So they have given total profit of past 4 years 40,000. So total profit is 40,000 divided by how many years they have given? This is of last 4 years. So divided by 4. So this would be how much? 40,000 divided by 4. So that is rupees 10,000. Now we know the average profit. Number of year purchase they have given. That is 2-year purchase. So this is 2-year purchase. Don't get confused with 2 years as well as 4 years. Profit they have given that of 4 years. But number of year purchase is 2 years. Now you can apply the formula. Goodwill is equal to, that is average profit. Just now we have found out, that is rupees 10,000 into number of year purchase is 2 years. So 10,000 into 2, that is rupees 20,000. So hope you are clear. This is how you are going to calculate your goodwill of the firm. So hope you are clear. This is how you are going to calculate the goodwill of the firm. Now moving on to the next question. So again this is a similar type of question but with a different amount where they have asked in the previous year. Okay, so goodwill of the firm is valued at 2-year purchase. Now the number of year of purchase is 2 years. Of the average profit of last 4 years. Profit they have given that of last 4 years. The total profit of the firm of last 4 years are rupees 80,000. Calculate the goodwill of the firm. Now write the formula. Goodwill is equal to average profit into number of year purchase. Now what you have to do? Find out the average profit. Average profit is equal to total profit divided by number of years. Now how much is total profit they have given? Rupees 80,000 divided by number of years 4. So 80,000 divided by 4, that is rupees 20,000. Now apply the formula. Goodwill is equal to average profit is rupees 20,000 into number of year purchase is 2 years. So that is rupees 40,000. Okay, so 20,000 into 2, 40,000. So here also 10,000 into 2, that is 20,000. Here it is 20,000 into 2, that is 40,000. So this is how you are going to calculate the goodwill of the firm if they ask for 2 marks. Yes, so this was the 2 marks questions. Now moving on to the next one, 6 marks question. So I have told you, you will be having an alternative here. If they ask 6 marks from admission, then you don't get a 12 marks from admission chapter. You will get a 12 marks from retirement chapter. But in one of the year, they have asked this for 6 marks. But most of the time, they will ask 12 marks from admission and 6 marks from retirement. But in one of the year, they have asked 6 marks from admission and 12 marks from retirement. Okay, so let us see this question here. Raja and Kiran are partners sharing profit and loss in the ratio 5:3. They admit Chandan into partnership. All the partners agreed to share profit and loss equally they have given. Equally in the sense their profit sharing ratio is 1:1:1. Okay, calculate the sacrifice ratio of Raja and Kiran. Now, first let us see what the information they have given in the question. First we shall write. So, who are the partners? Raja and Kiran. And they have given their old profit sharing ratio. I'll write OR, old ratio. So that is 5:3. So you can write 5:3 as 5 plus 3, 8. 5 by 8 and 3 by 8 in the form of fraction. Okay, now who is a new partner? So they admit Chandan. So Chandan is a new partner. Next what they have given? They have given new ratio. So new ratio of all the 3 partners, that is Raja, Kiran and Chandan. So Raja, Kiran and Chandan. So their new profit sharing ratio is 1:1:4. 1. Equally means 1:1:1. So which can be written in the form of fraction 1 plus 1 plus 1, that is 1/3, 1/3 and 1/3. So new ratio also they have given. Now they have asked us to calculate the sacrifice ratio of Raja and Kiran. So your formula is sacrifice ratio is equal to old share minus new share. Old share minus new share. We have to calculate sacrifice ratio of whom? Because Raja and Kiran sacrificed, correct? Raja is equal to old share. So what is old share? 5/8 minus new share, that is 1/3. So you don't have a common denominator here. You have to find the LCM. So 8 3s are, that is 24. So 8 into 3, that is 8 to the 60, 8 3s are 24. Now we will get 3 here. 5 into 3, 5 3s are 15 minus here we will get 8, cross multiply. So 8 into 1, 8. So 15 minus 8, 8, 9, 10, 11, 12, 13, 14, 15. That is 7/24. Or the other way you can find the LCM here. Find the LCM of 8 and 3, it will be 24. Now whether 24 is divisible by 8? Yes, 8 3s are 24. So 3 into 5, 5 3s are 15. Here also whether 24 is divisible by 3? Yes, it is divisible by 8. So 8 into 1. So that is 8. So or you can cross multiply. 8 3s are 24, 5 3s are 15, 8 1s are 8. Okay. So 15 minus 8, 7/24. Next is Kiran. Kiran. So old share is how much? 3/8 minus new share is 1/3. So 8 into 3, 8 3s are 24. Now cross multiply. That is 3 into 3. That is 3 into 3, 9 minus 8 into 1, 8. So it is 1/24. Okay. So or else let's recheck once again. 8 3s are 24. So here it will be 3, 3 3s are 9 minus here it will be 8, 8 into 1, 8. So your sacrifice ratio is equal to sacrifice ratio is equal to 7/24 and 1/24. So it can be written as 7:1. So hope you are clear how you have to calculate your sacrifice ratio. So your sacrifice ratio will be 7:1. Yes. Now moving on to the next question, that is 12 marks question. So this is a question where they have asked in your previous question paper, that is your 2023 question paper. So go through the question here. Uma and Geeta are partners sharing profit and loss in the ratio 3:2. So they have given the profit sharing ratio. Their balance sheet as on 31st/3/2022 was as follows. So they have given a certain liabilities, amount, assets and amount. Now let us see later. Now on 1/4/2022, they admit Kamala into partnership on the following terms. So first adjustment is what? Kamala should bring 50,000 as capital for 1/6 share and 25,000 towards goodwill as per AS 26, which means that as per accounting standard 26. Depreciate furniture by 10% and appreciate building by rupees 10,000. Maintain PDD at 5% on debtors they have given. Provide rupees 2,000 for outstanding salary. Prepare revaluation account, partners, capital account and new balance sheet of the firm. Now directly we shall see the solution. Okay, then I will tell how these adjustment has to be taken and how the items in the balance sheet has to be taken. Now first we are going to prepare what? Revaluation account. So I will write the heading here, revaluation account. So remember, the format of your revaluation account is particulars, amount, particulars and amount, debit as well as credit side. Under debit side, you will have a hint here. You will write A minus L plus. This you have to write in the pencil so that you can easily solve the problem. A minus L plus. And in the credit side, it is A plus and L minus. which means that if any assets have decreased and liability value have increased, you will record in the debit side. In the credit side, if any assets have increased, A plus, and liability value have decreased, L minus, will be recorded in the credit side. Now, in order to prepare your revaluation account, what you have to go through? You have to go through your adjustments. Now, leave this first adjustment. This first adjustment will be recorded under partner's capital account. Go through the second one. Depreciate. Depreciate means what? Decrease. Furniture. So, decrease in asset. Correct? Furniture is what? Asset. So, decrease in asset by 10%. So, where do you record decrease in asset? A minus. Correct? So, we'll write to furniture account. To furniture account, decrease in asset. By how much? 10%. What is the value of furniture? Value of furniture is 10,000. So, 10,000 into 10%. 10,000 into 10 divided by 100. So, how much will get 10,000 into 10%? 1,000, I guess. 10,000 into 10%. Yeah, it is 1,000. So, hope you are clear. Now, continue the sentence and appreciate building. Appreciation means what? Increase. Building is what? Asset. Increase in asset by rupees 10,000. They have given the amount directly. So, by building, increase in asset, A plus. So, you will record in the credit side by building account. And here they have given the amount directly, that is rupees 10,000. 10,000. Next one, maintain PDD at 5% on debtors. Now, let us see whether we have PDD here in the debtors. No. Now, they have told us to maintain. Remember, anything which is deducted from debtors, it is a liability. Now, PDD is what? Liability. Now, here in the balance sheet, it is not there. But in the adjustment, they have told us to maintain, which means that your liability have increased. Okay. So, PDD is what? Liability. So, increase in liability. So, where do you record increase in liability? That is L plus here in the debit side to PDD. So, how much it is? They have told us to maintain 5% on debtors. So, debtors value is 45,000. So, 45,000 into 5%. 45,000 into 5%. So, how much will get? 45,000 into 5%. So, it is 2,250. Hope you are understanding. Next one. Provide rupees 2,000 for outstanding salary. Now, if you see your balance sheet, nowhere there is outstanding salary. So, outstanding salary is what? Liability. But it is not there in the liability side. But in the adjustment, they told us to create, which means that a liability have added on to the business. So, increase in liability. Outstanding salary is what? Liability. So, increase in liability. So, where do you record? That is in the debit side, L plus to outstanding salary. So, how much is outstanding salary? 2,000. Yes. No other adjustment. So, what you have to do? Balance both the side. Balancing figure will be transferred to where? Partner's capital account. Okay. Now, we shall balance in the credit side, it is 10,000. Whereas in the debit side, it is less. So, 10,000 minus 1,000 minus 2,250 minus 2,000. So, 4,750 is a profit. Okay. So, 10,000 is a balancing both the side. Minus all these, you will get 4,750. Your credit side is more than debit side. So, what it is? Profit. So, you will write to profit transfer to partners capital account. Now, who are the partners? So, let's see the name of the partner. Only to the old partners, Uma and Geeta, and the profit sharing ratio is 3:2. So, Uma and Geeta. The profit sharing ratio is 3:2. So, 4,750 into 3/5, 2/5. You have to distribute. Write in the inner column 4,750 into 3 divided by 5. So I'll get 2,850 and here 4,750 into 2 divided by 5. So I'll get 4,750 into 2 divided by 5. So 1,900. So if you add 1,900 plus 2,850, you'll get 4,750. So this is the profit. So hope you are clear about your revaluation account. Next, coming to your next account, that is partners capital account. So I'll write the heading partners capital account. So how do you begin your partners capital account? So this will be the format. You will be having debit as well as credit side. Under debit side particulars and name of all the partners. Uma, Geeta and the new partner Kamala also. Particulars Uma, Geeta and Kamala. So if you see the new partner who is admitted, Kamala as a new partner, correct? Now first what do you transfer? You will transfer the capital of the partners. So I'll write it as by balance brought down. By balance brought down, what is the capital? They'll give in the balance sheet. Uma and Geeta, 60,000 and 40,000. So this capital has to be transferred. So 60,000 and 40,000. Kamala dash. Next is you will transfer the revaluation account profit. So you got profit in the debit side, correct? You will transfer to the credit side by revaluation account. In the bracket profit. So how much each partner got profit? That is 2,850 and 1,900. 2,850 and 1,900. After that, this is the two steps. First you will transfer the capital. Next you will transfer the revaluation account balance. Third step, you will check your balance sheet. You will check your balance sheet whether there is any reserve, fund, profit and loss account. Now check your balance sheet. Yes, we have general reserve. Yes, reserve, fund and profit and loss account. So we have general reserve and we don't have any other. In the asset side, you might get profit and loss account also. So you have to check the whole balance sheet. So we have general reserve 25,000. We have to distribute among the partners. So how do you write? By general reserve. And the general reserve amount is 25,000 into their profit sharing ratio 3:2. 25,000 into 3:2. So when you distribute 25,000 into 3 divided by 5, so I'll get 15,000 and 10,000. So hope you are clear about 3 steps. Now coming to the fourth one, now come to the new partner. New partner have bought capital as well as goodwill. So we have to record that. So how much capital? Now here it is cash. So we'll write by cash account. Capital is 50,000 plus goodwill 25,000. So by cash account, this is capital plus goodwill. So capital is 50 plus 25,000. So it is 75,000 in the new partners column. Next entry is for goodwill distribution. Now what happens here? The goodwill 25,000, what is bought by the new partner, it has to be distributed among the old partners. So let us do a working note here. Working note. Now we have to distribute the goodwill. So Kamala's new partner's goodwill. Kamala's goodwill is equal to rupees 25,000. Now this goodwill has to be distributed among both the partner, that is Uma and Geeta. Now in which ratio? So it has to be distributed in the sacrifice ratio, but in the question they have not given sacrifice ratio. So old ratio itself is considered as sacrifice ratio. So what is the old ratio? 3:2. So it has to be distributed in the ratio 3:2. Now let us see Uma's share of goodwill. Uma's share of goodwill is equal to 25,000 into 3 by 5. In the same way, Geeta's share of goodwill is equal to 25,000 into 2 divided by 5. So 25,000 into 3 divided by 5. So I'll get 15,000 and here it is 10,000. So this is a goodwill. Now you have to write this in your partner's capital account. So your entry will be new partner's capital account to old partner's capital account. So this is as per accounting standard 26. Now who is a new partner? By new partner is Kamala. By Kamala's capital account, and here two old partners, to Uma's capital account, and here to Geeta's capital account. Okay, now while writing the amount you have to be careful. So for Kamala, now here it is dash. So how much you got the distribution of goodwill? 15,000 and 10,000. Now you will write the amount here, 15,000 and 10,000. And coming to here, so these columns should be dash now. So here it is 15,000 and 10,000. So hope you are clear. This is the goodwill calculation as per accounting standard 26. Now coming to the next adjustment. Yes, we are done with the goodwill and we have to see whether the goodwill is withdrawn by the partners. No, it is not withdrawn. It is not mentioned in the question. So it is understood that it is retained in the business. Now we have to calculate. So now you have to balance both the side. Balancing figure will be carried down. So when you balance, so individually you have to balance. Now let us calculate that of Uma. So 60,000 plus 2,850 plus 15,000 plus 15,000. So it is 92,850. 92,850 both the sides. And the balancing figure will also be 92,850. So this will be to balance carried down. And this is balancing figure. And in the same way, Geeta. So 40,000 plus 1,000, 40,000 plus 1,900 plus. So it will be 61,900. Here also 61,900. Balancing figure is also 61,900. Now coming to the next one, so we have 75,000. 75,000 minus 25,000. So it will be 50,000. So this is the balance carried down. So whatever the amount you have carried down, bring down that balance. So how do you write? By balance brought down. And the amount is 92,850 and 61,900 as well as 50,000. So this is how you will prepare your partner's capital account. So hope you are clear about it. Yes. Now we shall directly move on to the balance sheet. So you will write the heading balance sheet as on. Balance sheet as on which date? On the date of admission. Now let us see on the date of admission. When did they get admitted? 1/4/2022. Remember, you are not going to prepare at the end of the year. You are going to prepare on the date of admission. So 1/4/2022. 1/4/22. Now we shall start with all the assets. So in order to prepare your balance sheet, you have to go back through your question, that is your balance sheet. Now let us see the assets. So first one is what? Cash, 15,000. So we shall write that cash, but not in the inner column, 15,000 plus what is the capital and goodwill bought by the new partner. So how much capital bought by the new partner? 50,000 and goodwill 25,000. So 50 plus 25. 50,000 plus 25,000. So it will be 75,000 plus 15,000. So that is 90,000 will be the cash. So hope you are clear. You'll write the cash, what they have given in the balance sheet, plus capital bought in by the new partner, plus goodwill. Next one, if the goodwill is withdrawn, then you have to minus. Next is stock. Stock 30,000, but there is no adjustment on stock. So I'll directly write stock 30,000. Stock 30,000. Next one, debtors 45,000, but we have PDD 5%. So 45,000 minus 2,250. Debtors 45,000 minus PDD 2,250. So 45,000 minus 2,250. So that will be 42,750. Next one, after that, so investment 40,000. There is no adjustment, write directly. Investment 40,000. Investment 40,000. Next one, furniture 10,000, but there is a depreciation, correct? 1,000. So furniture 10,000 minus 1,000 depreciation. Furniture 10,000 minus depreciation, that is 1,000, outer column 9,000. After that, we have building 50,000, but we have appreciation 10,000. So building 50,000, add appreciation. Building 50,000, add appreciation, that is 10,000, outer column 60,000. Next one, after building, so we are done with all the assets. Now come to the liabilities. So we have creditors 50,000, no change in creditors. So creditors 50,000. After that, bills payable 15,000. Bills payable 15,000. Next, we have general reserve already distributed. Capital, we have already taken the capital. Now, let us see anything which has been left out. So, we have to write the capital. So, not this capital what we have already taken. So, we have to take the capital. This capital we have to take. Okay. So, let us take the capital. So, capital, how much we have? So, we'll take capital. Now, who are the partners? Uma, Geeta and Kamala. Now, what is the capital? 92,850. 92,850 and 61,900. 61,900 and 50,000. Total everything and write in the outer column. So, it will be 92,850 plus 61,900 plus 50,000. So, it will be 2,04,750. 2,04,750. Now, let us see whether we have recorded all the adjustment twice. Okay. So, coming to the first one, Kamala should bring. Yes, we have taken under partners capital account as well as in the balance sheet we have added to cash. Depreciate furniture and appreciation. Yes, we have taken under evaluation account once and in the balance sheet. Maintain PDD at 5% on debtors. We have taken twice, once in revaluation account and once we have deducted in the balance sheet. Provide 2,000 for outstanding salary. We have taken in your evaluation account, but we have not taken in the balance sheet. Now, outstanding salary is what? Liability. So, we have to take in the liability side 2,000. So, outstanding salary, that is 2,000. Now, we shall add both the side. Let us see our balance sheet gets tallied or not. Okay. So, 50,000 plus 15,000 plus 2,000 plus 2,04,750. So, it will be 2,71,750. 2,71,750 in the liability side. Coming to the asset side, 90,000 plus 30,000 plus 42,750 plus 40,000 plus 9,000 plus 60,000. So, here also we will get 2,71,750. So, both the side our balance sheet gets tallied. So, this is how you are going to solve your 12 marks problem. So, my dear students, hope you have understood today's session. See you all in my next session with a new topic. Till then, take care. Thank you.